Hey guys, Youthful Yules here. We're gonna do another portfolio video for this week, and let's get started. So, for this last week, we can take a look at the overall market. Looks very green again, besides a little bit of healthcare, mainly United Healthcare. I believe the CEO stepped down, um, so there's that. In fact, might be able to click in here. Um, yeah, I don't know. I haven't been following this too much. Honestly, our position isn't suffering that much. So, but overall, the market, had a really great bull run last week. And yeah, that makes me a little bit worried for this next week. Obviously, typically you don't have typically it flip flops, right? Or maybe we're gonna have a little, a green week, but maybe not so much, not this green, right? As we can see, Nvidia, like Palantir, I think these are up 10%, Tesla up 17%, Google up 8%. This is probably because of their DeepMind stuff that just came out, which should revolutionize quite a lot. And we have a lot of math, like basics. Basically, it can, I think it basically knows how to calculate 4x4 matrices way better, which um, obviously they just released this paper, but we're going to see a lot of enhancements going forward, including AI itself, right? I think AI, like their DeepMind thing, was, basically went through all of these different things to try to find optimizations, and that in itself can be used, like the optimizations can be used in AI as well, because most of AI is just matrix multiplication anyways. So excited to see where that heads. But yeah, let's get into the portfolios. So we roll up a little bit, up to 220. Now I think most of this actually happened after market, during the extended market on Friday. So you know, take this number with a grain of salt, because unfortunately they do show that number not on the close, but like I said, after market. So, but at the end of the day, it is a little bit up, which is nice. So yeah. Uh, in the M1 Finance portfolio, I um did add. I have money on the way, $1,500. In fact, I need to turn this back on. Um, so there's that. But we can see here we have quite a bit of buys, 30 buys, but this is basically that one time per month that we go ahead and um, you know, input the money. Now, I will say I took out $2,000 once I sold everything. I don't remember if I covered this last week or when I did this, but I did take out that $2,000 from this portfolio, sold out of YMAX, QTOL, AKR, BTOL, and TQQQ positions. And then I took 2,000 of that and put it into Composer.trade, with the rest being just in this single slice, which is basically just our balanced portfolio, right? So ours is up 3%. If you go a SPY stock, this is up uh, 2%. So we're beating the market in that sense, despite us even holding, something like United Healthcare. So our semiconductors are up 9.81%, with the majority of the growth being from Nvidia, but almost on the same page with AMD, which is really nice. We have industrials up 5.8%. The majority of that coming from John Deere Company. And then technology, which we have the majority of the growth coming from Google. On the opposite side, obviously, we have 4% down. This is actually our only percent down slice, which again, 17% down on United Healthcare. You can see actually we're honestly not that far off from our uh target. Like, yeah, not nice that we're losing money on it, but we're not that far off the target. So, um, yeah. As far as the other two lowest ones, we have here the majority of the growth coming from Home Depot, but overall just pretty much trading sideways. And real estate, same thing. I think this is 1.9% or 1.5% almost, and the majority, well, there's no real majority, I guess. Between AMT and PLD, they're about the same. So overall, not bad there either. So yeah, it's pretty nice. I'm glad that this is working. It seems to be a lot better for just buy and hold. So yeah, like I said, we do have quite a bit of buys, and we are buying quite a bit. We're buying more United Healthcare than anything. You can say almost double that of Eli Lilly, and that's because it's down so much, which is a good thing, right? Because like hypothetically, if this company just comes back up, because it did actually, I think UNH stock, um, it did come up quite a bit. Now I'm trying to think, when was United Healthcare CEO killed, right? December 4th. Okay, so let's go a year, see how much that really affected it. So, yeah, I guess it didn't really recover up until maybe the 11th of last month. 610. Yeah, it almost recovered it, and now it's down quite a bit. So unfortunately, there's that. Uh, it's down about 50% for the month, which sucks. But again, if anything, if this company does survive, which obviously they still have quite a lot of money, let's be honest, this is good buying opportunity, right? Because it's down 50% for the month, it might spring back just the same as it did when the CEO got killed. So, yeah. Anyways, let's go over the. Let me check if I had any dividends. I did have a few dividends actually. So um, we had one from Realty Income. We had some security interest as well. We had Morgan Stanley, Procter and Gamble, Apple, and Costco. The biggest dividend being Morgan Stanley for $1. The smallest was I think Costco. So yeah, pretty good overall. I mean, it's probably a couple bucks overall. Not this isn't a dividend heavy portfolio, but can't complain. It's free money technically. With these big companies, it is literally free money if you think about it. Um, with something like high yield dividends, obviously, it's not exactly free money. I mean, technically, it's not exactly free money with the other one either, but yeah. So overall, not bad. Um, let's go into our algorithmic trading portfolio. So if I go, let's see, when was the last week? So the 11th, I could say. You can see here, so it's just not showing. Huh. I don't know why this isn't showing. Anyways, I did get into a new position here. 4 corners. This is no leverage. This is kind of our safe. These two are kind of our safe-ish sides of the portfolio. This one maybe less so. This one is pretty simple. Um, and yeah, that's kind of here there to weigh this other one, hopefully, so we're not at a complete loss, but it's not exactly a hedge because there's a lot of complicated logic in each of these to where they could technically hold all the short positions at one time, but it just kind of depends on how they're created. So, but you can see, oh, excuse me, why I did this. Oh, I meant the 18th to the 11th. Okay, 1 second. The 11th. There we go. All right, so you can see here. Overall, we did end the week on all of the symphonies, aka the strategies, positively, which is really good. So there's that. If we look at, I think we can see this for the money. So we started the week around $2,602. So we went up around $18 or something like that. So yeah, and then so I did 1,500 here, and then 500 in the composer strategies. And as far as how I'm gonna divvy those up, I'm thinking if we go here, I'm thinking I do want this strategy to hold about 75%, because this is going to be our risky side of the portfolio, right? Whereas this is our pretty balanced and safe side of the portfolio. And I want to take that risk to an extreme. So I'm going to be putting about 75% into this, and then the remaining 25% split between these two. So, yeah. This one was down a little bit. Technically, this was a different strategy. We sold it, then we went into this strategy, went down. So we're only down about $2 on this strategy. We're up about $3 on this, and you can see we're up about 120 odd dollars on this. $126, which almost 27. Very good, right? Very good. And I'm hoping this is gonna go higher, obviously. Let's see if I can. Oh, they don't have stats on here like they do on the simulated. Like on here, you can see that it says uh, blah 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 return. Now, if we looked at the max now, which is really not that much data, this is saying about a 1,000% return, annualized return, which if you do the math, obviously that is a 10x return every year. So that is why I'm treating this so risky. Now I can lose all my money, but this OSS start date, or OOS start date, is basically when the strategy was last edited, and up until that point, you can see it's done very well. So if we even do this OOS start date, we're still looking about an 8x return annually. And its max drawdown is just a bit above. Well, no, it's quite a bit above the SPY in the same area, but you can see our Kalmar ratio is quite a lot higher, which means that it's return to risk ratio basically is very good. Same with the Sharpe ratio. That's essentially a similar metric, but yeah, slightly different, because this one uses the max drawdown, I think, and this one uses, I think, the average returns. Yeah, mean of daily returns. So pretty nice there. And what's really good is I actually was looking at aftermarket. So if you can see our current holdings on each of these, I will go to that real quick. Some of these did trade, like these two have traded quite a bit each day, right? I think it only trades once per day, but I think the last 2 or 3 days it's traded 2 times. So you can see our current position on corners is TLT, BTOL, and VIXI. We have an XLP, XLV, which is kind of our main things on these, which unfortunately, healthcare is obviously down right now, but we'll see how that performs going forward. But our main position is UVXY, and I looked on the aftermarket, and you can see here I looked up the NASDAQ, because this is something I wish they would keep, but if you look up UVXY on Google or really any charting website, the extended hours will show up while you're in extended hours, but then it only shows, like, this is not true. From what I can gather, you can see on the NASDAQ it's saying basically at 8 p.m. it was trading for $23. If you do the math, that's about almost a 7% increase. So I'm really hoping I'm gonna try to look at the pre-market tomorrow if I'm awake. But I'm hoping that this goes up 6% because what that would mean is obviously 75% of our portfolio would go up 6%. So our current value is this. If I look up a calculator here and times it by 1.069%, for example, if it's exactly the same, excuse me, that's a quite a big return, and we can say 1.839 divided by this, and I think we could do something like 1 minus, and then oops, forgot that doesn't work. Times 100. Right here. So 12% return. That number would be a 12% return after the 6%, 6.9%, meaning the amount of money that we put into that strategy, we've already gained 12.5%. With this being said, this is something that I have this is one of my big criticisms for this platform is almost every other platform includes a MWRR, which is money weighted return rate of return. So you can see it here. That's what we use on our sheet over here, which I forgot to show you guys last week, but that is what I'll show you next. Robinhood uses this. This basically shows you, in regards to the amount of money that you put in, what is your return? Because what this currently shows me is not indicative of our actual gains because it's weighted quite a bit down from the money we put in, right? So if I would have $50 or $100, let's say, in our portfolio, we get $200 at the end of the week. That's a 100% gain, right? The problem is, let's say the next day, I deposit, I don't know, $1,000. That 100% becomes very low in comparison. So it's something that I wish they would add. Another thing that I wish they would add is basically the cumulative return for the selected date. This is something they actually have on their simulated thing. You can see, obviously, we saw that here. So if I go year to date, cumulative return is 59%. If I do, 1 month, cumulative return is 32%. So I wish they would do that because that also helps a lot to see, how our portfolio is doing overall. And we can see that, M1 Finance does the same thing here, where you can select the time range. It will change basically all of these stats because they have all of the data already. So I wish that's something they could add. But they're trying to fix stuff. They did have a little bit of a data issue on Friday, which I think affected a few people, and a lot of people are saying that they're experiencing some liquidation stuff. So I'm curious on that. I didn't run into any issues, I don't think. I think I think our symphonies did actually trade correctly last week. So yeah, but overall pretty good week. We can see in comparison. So I actually split these up. Just basically took those same exact numbers, and I split them up, and then the amount is basically the sum of that. That's kind of what we were using before, but this kind of shows us. And what I'm thinking of maybe doing is actually, I don't know how I feel about this, but maybe keeping a daily log of each of the platforms that we're on. That way we can just kind of see our that would actually show us, like, for example, if Composer never adds that money weighted return, we can actually calculate that ourselves on a daily basis or a weekly basis, basically as granular as it would be one day. So, but overall, we're up 4.15%. The market, or at least SPY, is saying it's up 5.29%, which is a bit contradicting, because this says it's actually up 2. 0.16%. So I'm not sure which one's correct, but at the end of the day, it's we're doing very well on our side of the week. For the last month, we are up, I think, $1,400, which is very good. I think we're still down potentially for the year. Um, yeah, wow, we have a lot of ways to go for year to date. To really balance that out, we're still down $1,400, but we're really close. We're only $264 away from the amount of money that we are basically. What am I trying to say? Basically, the amount of money that we've put into the portfolio versus the amount of money that we have now, right? We're only about $264 away. In terms of, assuming that these numbers are correct, in terms of difference on SPY, we're still about 5.6% away. So still actually quite sizable recovery to come. But honestly, I can see us doing it by the end of this year. And I'm pretty hopeful for that. And yeah, let's look at the overall overview page. So we can see here, this is a bit out of date, the dividend yield. And yeah, some of this is probably just going to go away. But you can see the main reason I wanted to come on this page before I end out the video was this portfolio to date chart. So you can see here that we had quite a big lead at one point. I think this would probably be the highest point. We were at 7,600 while the SPY value was 70 or 6,400. So we were actually above $1,200 at some point. But we've lost a lot of that, right? And you can see at the, sometime in February, we had a huge time, like this, we got killed is what I'm trying to say, right? So, or that's not February, that's March, right? So sometime in March, we got killed quite a bit. And then this was the beginning of the month in April, which would have been the tariffs, which affected our portfolio quite a bit. But we're getting quite a lot more growth. You can see from this week to this week, quite a big jump. So technically, that's also because of the money that we put in. But you can see overall, technically, SPY is still above both our money that we put in, as well as the portfolio. So we've put in about $15,000, and this is about $15,600. So, yeah. But yeah, I think that's everything that I wanted to cover for this week. I will be doing obviously another video later or earlier or on Wednesday. Sorry, for the dividends or the distribution announcements for YieldMax, and I'm gonna try to also segment a small part of that video to kind of talk about just what's happening in the market, because it's right down in the middle of the week, which is very convenient. So yeah, overall, not a bad week, and actually a very good week. I'm looking forward to more weeks like this, and I really hope that yeah, I don't know. I hope everyone out there is doing good, is healthy, and I hope you guys are enjoying the recent gains. Hopefully, you're in some positions that allow you to kind of take those gains into. I mean, I don't know. Just hopefully, you have positions and holdings out there that are benefiting from the increased volatility the last few weeks. Um, because yeah, I know it's been a pretty crazy time the last last month and a half. So I could understand that people are kind of worried, but just hold in there, hang in there, and we're gonna make it up on top, even if that means falling short of the market, aka the S&P 500. I'm sure that if you guys stick to your strategies and you really do a lot of research on them, they're almost bound to uh, at least give you a little bit of return. At the end of the day, I was talking to my wife about this. At the end of the day, what really matters for me in this time, yes, I've lost, unfortunately, quite a bit of money that I could have had. through some of the dividend stuff. But at the end of the day, I'm very glad that I did that because that is now a learning experience and why people don't do that conventionally, right? Why those don't really work. Because there's been past examples of those, maybe not so much of an extreme, but I think you know, I don't think it's almost like a leveraged fund where it doesn't really work long term. It might work temporarily, but that kind of defeats the whole purpose of a dividend stock. So not just that, but this is kind of why I'm trying my luck at on this on Composer, as well as just trying different things such as this one. I like the amount of money that I've lost on this position alone has actually been more than the amount of money that we are different on SPY, which you know obviously really sucks. But now I know not to hold positions long term. Even if I feel like they're gonna do well, the fact that this is a leverage fund is just gonna really kick us in the butt, right? So I'm just gonna keep it in here though. I've said this a million times. I'm sure you guys are tired of hearing it, but if this goes to zero, like I'm already treating this as zero in my head, so it's completely fine. Um, But what I'm trying to say is, I'm very glad I've taken these, different strategies because now I have a lot that I've learned from just being in the market. And that's like the main thing because I'm fairly new to a lot of this, like the stock market stuff. I think realistically, we're coming up almost on a year. I think I started maybe July 1st. Um, but almost a year since I started doing this stock stuff, like just anything stock related, in terms of my own managed stuff. I have like a 401k and whatnot, but so I've learned a lot in the last year, and I'm very thankful for you guys, you know, watching all the videos, and yeah, hope you guys keep going at it, and as always, I wish you guys a wealthy future.